I said, we're going to start with a fresh topic, which is statement of cash flows. Again, when you all have done PL and balance sheet in your as a part of your BCom course or MCom course, you all have also come across cash flows. Now, other than PL and balance sheet, other than your notes to financial statements, other than your statement of changes in equity, other than these four items, there is a fifth item which is needed is statement of cash flows. There's a standard dedicated on how you'll present it. It's IS 7. Yeah. Now, anyone has any idea that why statement of cash flows are needed? I mean, we have a PL, we have a balance sheet. What additional is a statement of cash flows giving us?
The value of cash at the end of the year.
Okay, so Jayani says value of cash at the end of the year. So if you see your balance sheet, तो correct. उसमें जो bank balance होता है cash.
End of the cash.
Okay. So coming to just I'll solve Jayani's problem. I mean query. She's saying because cash position you get, but from the balance sheet also you get the cash position. Please mute your mics, guys.
Oh, yeah, घेऊन जा ना. हे पण घेऊन जा, मी खात राहील नाही तर.
One second, guys. It's too much background noise. Yeah.
We get to know about our investment activities and on investment operation activity, what we received and
Yes.
To exactly know how much we got from each and every separate line of activity.
Correct. See, if someone will tell me we come to know the cash position, so that's not a valid answer, like Jayani said, because balance sheet mein year end mein mil jata hai cash position, so you don't need a cash flows for that, right? But like y'all said, you know the segregation, like you know how much has come from investing activities, how much has come from operating activities. Ye segregation nahi milta balance sheet, you just get the total position. So segregation ke liye cash flow is important. Okay, now why segregation is so important? Now, for example, अगर 2013 का balance sheet I analyze and 2014 का if I analyze, okay, historical statements is for some company, and I can see कि 13 में 5 million cash position था, and now it's become in 2014 it's become 8 million. So if I have to just comment on the cash part of it, I might go like and say that okay, from 2013 to 2014, the cash has increased by 3 million, which is a significant jump. You know, and I might go on telling that the company is doing fairly good in terms of its ability to generate cash. Okay, but this is a wrong interpretation. But just by comparing a 5 million and 8 million, I can't say that the company has a good cash generating capacity. Why? Any idea why I can't say this? Why I can't be sure of this? Why can't I be sure of this?
This may not necessarily be like a revenue generated, but maybe it has caused due to some kind of one-off event.
But anyway, yeah, like I'm saying, if a PP is sold for 7 million in the current year, and out of this 8, khali 1 million core trading se related hai, and if I still go on and commenting saying ki, acha, the business has done really good, it makes no sense. How did the business do good agar ek machine sell ho gaya of for 7 million? Machine sell on, why is it bad? Because you do business with that. If you're selling it, it's not a good sign. It means you're facing cash problems. So that's why you started selling your property, plant and equipment. Okay. So anyway, I hope everyone has understood the purpose ki cash flows kyun banana hai. Anyone didn't understand this part, tell me. Kyun cash flows banana, the reason. A fifth additional statement kyun lag raha hai, for the shareholders or for the stakeholders. Okay. So everyone is clear to this part. Okay. Now there is a specific way we're going to present it. Like there's a specific way we present our PL and our balance sheet. There's a specific way we present our cash flows also. Okay. Now cash flows as a standard itself is not very rules based. It's not very prescriptive. As in, it doesn't dot to dot tell you that so and so event happened, take it to this place. So and so event happened, take it to this place. It just gives you some generic rules. Okay, it just gives you some generic rules. Using those principles, you do the segregation. Segregation into what are the 3 major activities that you segregate cash flows into?
Operating, investing, and financing.
operating, investing, and financing. Operating meaning your core trading business, right? Your core business, just a cash generator. All those activities will go in operating. Investing as in purchase of land, property, machinery. This is investments. These are investments of the business. So sale of them, purchase of them, receiving dividend income. These are all clubbed as investing activities. Okay. Then financing activities would be from where you raise funds to do business, from where you raise funds. Are you using shareholders capital, as in are you using funds from the shares, or are you taking money from the market in terms of loan? All that goes in financing activities. So these are the three major segregations.